Okay, so you're ready to sell your mortgage note, your land contract, or your trust deed, but you have a couple of questions that need to be answered. And you have one big question that is of concern to you. And that question is, how can you make your note more attractive for a sale? Most people holding a note don't even think to ask this question. They just either they hold on to it and they keep collecting payments, or either they try to sell it and they get rejected and they don't understand why. Well, they understand after they get rejected when the investor tells them why they rejected the note, and then they have to start all over and try to make it more attractive. So this is the question: how can you make your note more attractive for a sale? Now this is a six-part answer. Number one, the down payment. A mortgage note investor will look at down payment when receiving a privately held real estate loan for purchase. Equity in the property is very important. How much money did the borrower of the loan put down on the loan's origination? This will determine how secure the note for sale would be as an investment. A decent down payment is 10 to 15%. A good down payment is 15 to 20%. A great down payment would be 21 to 30%. And an excellent down payment would be 31% or more. A good rule of thumb is the more money you collect from the borrower when you create the loan, the more money the loan is worth to the mortgage buyer when it is sold on the secondary note market. If the borrower has less than 10 to 15% down, the note will still sell, although the asset will succumb to a steeper discount, which varies depending on the total loan characteristics. The higher the down payment, the higher the offers when it is sold, plain and simple. The closer the property sells, the closer the property seller stays to 31% down or more, the more money you'll receive when you go to sell the note. Number two, borrower credit rating. The credit rating is very important. Will you buy notes with the borrower's credit rating no lower than 600? The perfect borrower has a credit rating of 700 or higher. This makes the note very attractive. Question: why would a borrower do a deal like this instead of getting approved by a bank? The credit score might be good, but the debt-to-income ratio is probably terrible. Basically, their income source is low and the bills are high, but they pay their bills on time. That's why you have people with excellent credit that do seller finance. Number three, loan terms amortization. Stay away from interest-only structures and balloon payments of any kind, unless the seller does not mind a partial offer. Structuring a business loan as an interest-only structure with a balloon payment is a very risky proposition in today's market, because the borrower would need to be approved for traditional loan in order to satisfy the balloon payment at maturity. To a buyer, the bulk of the return on investment arises from the balloon payment being paid in full and on time. Very few, if any, traditional lending institutions will fund these types of requests, which leaves the note holder stuck with the devalued note. Stay away from interest-only and balloon payments. A typical note buyer usually likes to be out of an investment within 5 to 10 years, depending on the note buyer's risk tolerance and investment appetite. Creating a mortgage note with a 15, 20, or 30-year full amortization loan structure will likely succumb to a much steeper discount when being priced for a full purchase. In order to maximize value when structuring a note, it is suggested to structure the loan as a fully amortized asset and keep the maturity date at 10 years or less. 5 to 7 years is a much safer bet for those selling who require absolute maximum value. Anything above 10 years will take a bigger hit due to the long wait for return on investment. Always keep the loan's interest rate at 3 to 7% higher than what the primary lending market is charging. This means that the loan's interest rate must reflect the risk that the property seller is taking by seller financing the transaction in the first place. Keep the interest rate at least 9 to 15%, depending on the borrower's credit score and down payment amount. If the borrower wants a 5% interest rate, let them go to the bank for financing. Plus, a higher interest rate will protect you, the seller, from a deeper discount when the note buyer figures their yield in the equation. The higher the interest rate, the more shelter the seller has from the note's discount. Number 4, payment record keeping. This is an item that is grossly overlooked by most sellers when creating a note for resale. A small part of the asset's value comes from the cleanliness of the seller's record keeping abilities. It is of the utmost importance that the seller either keep and or file canceled checks, hard copies or electronically, or have access to bank statements proving that the payments were collected in a timely fashion. During the underwriting process of the real estate note transaction, any well-informed note buyer will request that the seller provides either canceled checks, deposit slips with a bank stamp on it, or bank statements showing that the payments were made on time. If the borrower pays you in money orders for whatever reason, example, the borrower does not have a bank account, it would be suggested to make copies of the money orders before cashing them. If the money orders are being deposited into bank accounts, it is not 100% necessary to make copies because the bank statements will show the deposit on file. Nevertheless, making copies is just an added security measure to ensure that the note seller's record-keeping status is in order, which will in fact increase the value of the note. This also goes for down payment checks and record keeping as well. Loan seasoning. As every note buyer is different, most mortgage note buyers do like to see at least 1 to 6 months of seasoning before placing a bid on a mortgage loan for sale. This particular item does vary between note buyers. For the most part, many mortgage note buyers will most likely decline on a note that has not been seasoned at all, like a simultaneous closing. The seller, you, may need to collect at least 3 payments before submitting the note for purchase. This way, there is some sort of visual indication of positive performance pertaining to the loan. We will buy a residential mortgage asset as long as there was 1 payment collected on time. As far as commercial notes, we require that there be 3 to 6 timely payments collected depending on the down payment. The larger the down payment, the fewer payments we require to be collected by the seller prior to the sale. We have been involved in instances that allowed this item to be waived due to the large down payment submitted by the borrower at origination, 40% down or more. Out of all the above listed items, loan seasoning is truly a matter of note buyer's investment preference. It is mandatory with us to have a mortgage loan seasoned by at least 1 to 3 payments before we can buy it. 6. Documents in closing. If you are passionate about selling real estate notes, we hope the information on this page proves useful. Executing the above mentioned suggestions will lay a strong foundation for engineering a high-value residential or commercial mortgage note that will successfully sell on the secondary market. Also, always use an attorney or a title company to draw up the closing documents. Example, the note, the deed, mortgage, land, contract, depending on the state and so on. Remember, if the note is not recorded by the county in which the property resides, it is not a legal debt, which means it cannot be sold to a buyer. Enlisting an attorney or title company will avoid any problems with the asset status in the eyes of the law. When it comes to structuring a mortgage note for resale, corners should never be cut. If they are, a seller, you should accept friction, delays, disappointments, and, of course, the possibility of getting stuck with the note. Properly informing yourself on structuring a mortgage note for resale will be the difference between selling the note or not. So if you have fulfilled every last one of these terms in here and you're ready to sell your note, you need to come to our website at getcashforyourmortgagenote.com and click on Get a Quote. Have all your information ready and fill out the form and hit send, and we'll get your quote back to you within 2 to 3 days.